This is a quick video to show you what stop hunting looks like. And the only reason I noticed these is from the automated orders that triggered when I noticed how close they got to actually hitting some of the stops. Now, there's two different orders, and these were both inside of the Russell today that triggered for me with the automated scripts. The first trade inside of the Russell was a bounce off of the aggressive models, and the second was a play off of that same retest into the close. Why shorting the Russell compared to the other markets? Well, I think the Russell, if I actually come in first, looks to be one of the weaker markets along with the Dow. The way I come to that conclusion is by loading in the multiple time frame market pulse. And all I'm doing is I'm studying the charts 15-minute and greater. And what stands out to me is all of these orange labels daily to weekly suggesting that now we should be switching into this more bearish territory, or at least are there. And the 2 hour is the one bearish market. And you contrast this with the Dow looks similar. And I'll show you the Qs. So you should see here Dow, again, more of the weaker trends. But you check out the Qs here. And inside of the Qs, you should notice that most of these longer time frame trends in the Qs are actually a little bit more towards that bullish side. And the same idea is true inside of the S&P 500. So it's the Dow and the Russell that I'm really looking at shorting right now in this volatility, and I'm trying to use these automated scripts to essentially just be hands off. And today, one of the automated scripts entered in this particular candle right here. So now let me show you that trade. So if we come in, it entered on this candle, and that was all on the basis of I wanted to have the momentum cross, and then I was trying to test some retest ideas, basically ways to get better entries. I got filled in this particular green candle. And what's interesting is after this green candle, we continued to drift higher. Now the high right here, if we were to take a look, and you can see that right in this value if you want to see it for your own eyes, is $225.20. That's the high right here, and that was 225.20. Now, what's really interesting is for those of you that are very patient with your entries, you might have heard this adage, enter where you would normally place your stop. Well, for most people who went short here, their stop would be above 225.20. Well, this candle's high, this red candle right here. Now I'm going to show you that. 225.21. That to me is about as picture perfect of a stop hunt as you can get. Taking out all people who have their stop at 225.21 or 225.20, take them all out before resuming that downward pressure move, which still you didn't get the level of follow through that at least I was expecting. I was expecting a move back down and even breaking below the day's lows, but instead you saw buyers hanging around here. So I thought this was a very interesting idea or trade, stop hunt, whatever you want to call it, worth calling out. And for those of you that are patient and say already looking at entering a trade here, one other automated script that I'm looking to toy around with is simply just placing the order 1 penny or 2 pennies, a few ticks, whatever it is, above that previous high on a trade you're already looking to get short. And this was an example of just that. I hope this idea is helpful for those of you that like to visualize ideas. Maybe you're building your own automated trading scripts, or you simply were interested in trying to figure out which markets look weaker compared to the other markets. Dow, Russell, to me look a little bit weaker compared to S&P 500 along with the Qs. But in all cases, you should notice the follow through the two different legs that we had today. Take care, everyone. Good luck trading, and I'll see you in our next update this week.